Good morning. You're watching BloombergQuint. This is India's first live streaming business news service. I'm Menaka Doshi.
Morning. So watching Indian Open, I'm Pradeep Pandya.
Good morning. I'm Ira Dugal. Let's get straight to the headlines. We've got a positive start for Chinese equities, which resumed trade after a week. Japan, South Korea and Taiwan are shut for holidays. Small and medium enterprises and exporters breathe a sigh of relief as the GST Council relaxes norms, tax cut rates on 27 items. Positive trigger for jewellery firms as norms for gold jewellery sales have been relaxed. KYC documents will no longer be required for purchase of more than 50,000 rupees. And the country's first and largest power exchange, IEX, their IPO opens for subscription today.
Well, the big question for today, or rather this week, is whether or not NIFTY can scale back 10,000 mark and Bank Nifty, for that matter, 25,000, or maybe other way around. If Bank Nifty moves up, maybe Nifty will also follow. Right now, Nifty has been leading. Bank Nifty, mid cap and small cap have been lagging. So let's see what happens. SGX Nifty this morning doesn't look very positive. In case Nifty is stuck, then the key thing to watch out for will be whether mid-cap and small-cap can keep their momentum and try to catch up with Nifty. That would kind of show you how much strength is actually there in the underlying market. Last week has been very good, rather last 5 to 6 sessions, when not only Nifty kept moving up and gained roughly 200 points over last week, around 250 plus gains we have seen from recent lows, but also India VIX kept falling, and that is interesting because India VIX is widely considered as a gauge of fear in the market. So option writers have been gaining confidence that market is back in an up move. That was a key indicator. Friday, we saw a strong rally in Indian markets. That was in a way driven by expectations from GST Council. Several announcements did come in. We'll have to see whether a lot of it was already priced in on Friday or we could get some support today as well. Looking at the global cues this morning, US corrected because of the weak economic data that came there. The job numbers were not strong. In fact, over the last 7 years, this was the first contraction. Of course, there could have been temporary reasons like hurricane. Today morning, if you look at it, there is a little distortion in the market because Chinese markets have opened up after a week's gap. So whatever numbers we see in China is actually trying to catch up with the rest of the world or other markets or even the overseas Chinese shares themselves that were moving up in this period. If you look at last week's trade, mid-cap, small-cap were moving up. They in fact moved ahead of Nifty. Metal, oil, so mainly commodity stocks and pharma. These are the stocks or sectors that were leading, not the usual banking, not capital goods or auto. Now, this morning, the cues for these commodity stocks is not very positive. So we'll have to see whether Nifty can find some more drivers. Looking ahead for this week, there is all-important announcement on Thursday, October 12th, when President Trump will give some clarifications because markets have been waiting to see what is his policy towards Iran, whether or not he wants to honor the agreement that was entered into earlier. And also on the same day in India, we'll see important results coming out with IndusInd Bank and TCS. So these are the most important drivers for this week. And talking about today, stocks in focus will remain gems and jewelry because the relaxations on PMLA will also focus on Adani Enterprises after their plans to disinvest and separately list the renewable energy segment. And also there are various other segments like filament yarn players. There will be focus on some of the pump companies because all these segments have got some relief or the other in GST.
GST bit, yeah. But interesting to point out that the US data on Friday, while there was a contraction in the numbers, the jobless rate actually went down to 4.2%. And I think the most important thing that everybody's been focusing on is the wage hike and the growth or the rate of growth in wages, which almost everybody across the board has been opining makes the December Fed hike and continuing contraction of the balance sheet an absolute certainty. But that's the story in the US. Let's quickly get you up to speed with all the top editorial stories we picked for you here on First Word. Like Pradeep mentioned, jewelers may have a lot to celebrate this festive season as KYC norms have been relaxed. Then you've got Oriental Bank of Commerce, the latest lender to be put under the RBI's prompt corrective action framework. What does that mean for the bank? and more may follow. The news report suggesting that Tata Group may wind up Tata Teleservices. We look at the possible reasons and the most important numbers that you need to know in such a situation. Let's start first with the big relief that came in for the jewelry industry. Pradeep?
Yeah, it's a big relief because 50,000 rupees jewelers thought was too small an amount, and they did face several hurdles. So now if you look at the reports that have come out from Morgan Stanley or CLSA, they also believe that this is a very timely relief for the sector, moving the ceiling from 50,000 to 2 lakhs because Dhanteras and Diwali is coming up. So probably festive season will be a tad better for them. Maybe during Navratri, they did face a lot of hurdles. Now, if you speak to jewelers, actually, they were kind of forced to generate cash because of this rule. What
does that mean? Generate cash, as in?
Because
they would have to report cash purchases, right?
Exactly. So if the customer was not at all willing to, pay in white and is not willing to give you the identification, then what do you do? So it is kind of, now up to 2 lakhs, because there is no issue, they can probably show the cash sales without identification, without identifying or giving an identity proof for the customer. And they have in any ways, figured out certain ways and means through which they were trying to report this cash. They were circumventing because the customer is not willing. That is the point that jewelers make, because they are already worried. They find it very difficult to generate and manage cash because of the way this government has functioned so far. So they have been avoiding cash, but they were forced because the customer is not willing. And they did multiple billing. They would break the jewelry into
I heard that a lot from jewelers saying that we were selling a necklace as like 3 pieces in bills so as to avoid this. I can see Ira nodding.
No, I think, I know that the brokerage houses are, excited about what this is going to mean for, the titans of the world or whatever. Probably not the titans, but the jewelry industry overall. But this is a huge pullback in your fight against black money. I mean, you have gone to town saying that we want to not only kill the stock of black money through demonetization, which was a, bit of a boo-boo, nothing really came out of that. And then you want to kill the flow of black money. The biggest store of black money in this country is real estate and gold. And now you're pulling back on these regulations in the case of gold. How are you doing that? Why are you doing that without any explanation? And then how can you possibly justify now seeking Aadhaar for bank accounts? Then it's a disincentive to put money in bank accounts. So, I mean, you're saying that you want bank accounts to be linked to Aadhaar, and you're saying jewelry sales are free. Third point, okay, even if you keep away the, morality of it or the black money fight, maybe there are nuances there that we don't understand. Just from a pure economic perspective, gold imports have been elevated this year. The minute customers see a window like this, gold imports can potentially spike. You're already running a current account deficit of 2.5% of GDP in the first quarter. Do you really want another reason for gold imports to spike? I don't know. I think this was ill-timed and this has not been explained properly. If there is a reason, I wish it would be explained.
So there isn't.
Just 2 points. Let me add. That because of a ceiling of 50,000, customers were discouraged to pay in card, because the minute you go on card, you are on record. So
that's the whole point,
right? And the second thing is that customer is not willing to pay. Therefore, the jeweler was also forced to keep certain portion of his sales in cash. Now he can report the sales. He will not tell you Mr. X, Mr. Y or Mr. Z who bought, but he can tell you that I sold 1,99,000 rupees worth of jewelry in cash.
I think you are giving jewelers too much
this is just
benefit of the doubt. They were rarely ever reporting this earlier on, which was the reason for why the government cracked down on it, saying such a large part of the gold and jewelry trade in this country occurs in cash, is neither reported at the jeweler's end nor reported at the customer's end, and therefore you had to fix this. And I would echo all of Ira's unhappiness on this, but I'll just say one thing, Ira, if this is any solace. Hasmukh Adia was quoted in a PTI story as saying that we are re-looking at this because we had asked jewelers to be the reporting entity under this Prevention of Money Laundering Act, which is what required. For those of you who may not have been clued in, which is what required for any purchases of gold or jewelry of up to 50,000 rupees to sort of be accompanied by KYC. They said we asked for them to report this, but we didn't clarify under what is the report format. that they had to use, and therefore it was creating too much confusion. So we're rethinking this, and that we will soon notify a new threshold. And second point here is there is already another existing threshold, which is 2 lakh.
2 lakh.
So any transactions in cash above 2 lakh need to come with all the KYC. I don't think transactions in cash above 2 lakh are permitted. Sorry. So therefore you have to make it in some form of non-cash payment. So that already exists. This one, Hasmukh Adia at least is quoted as saying that they will rework the formats and rework the requirements and see if they can offer. But yeah, that said, this season, and maybe who knows how long it will take them to rework it, the next month or 2 months will work beautifully for the jewelry trade. And I'm sure that has election gains as well, right?
So I think that is what government is probably looking at, because so many things have happened at the same time, and especially looking at Gujarat, which is kind of accounts for a larger part of the cash economy. Probably all the trade channels or the liquidity was blocked. So this will give some relief and may not be able to counter all the negativity that all these steps have created in the trading community.
But a big step back. Pradeep, come on. I think you'll have to.
I think
it's a step back, no doubt about that.
Yeah. I mean, I know that there's a need to boost sentiment and show.
Like you mentioned, probably it's only short term.
Well, we don't know, right? But yeah, let's take Mr. Adia's word for it, that they will come back with a new reporting format soon enough. So the other big story was OBC.
Yeah, so OBC over the weekend went into prompt corrective action. Now, they are the latest in a series of banks which have gone into prompt corrective action. I'll get into explaining what that means. But essentially, this prompt corrective action is determined based on a number of parameters: the bad loan level, the level of capital adequacy, return on assets, profitability. So put all of that together, and the RBI then goes and says that a bank needs to be under prompt corrective action. About 7 banks, 7 weak public sector banks, are already under prompt corrective action. A whole host of others may follow. Back in December, and I haven't done the updated numbers, but back in December, there were about 16 that had fallen into the NPA category of prompt corrective action. But it's not that cut and dry, because the RBI tends to put together the level of NPAs, the level of capital adequacy, the return on assets over a period of time, and also profitability. So based on all of that, they make a quantitative and a qualitative judgment before they actually recommend prompt corrective action on a particular bank. Just to give you a sense of what happens when a bank is under prompt corrective action, there are 3 threshold levels. There's a risk level 1, risk level 2, risk level 3. Risk level 3 is the most extreme. So if you're under risk level 3, the corrective actions are more stringent. Under risk level 1, it's quite simple. It's something like you can't pay dividends, etc., which in any case these banks were not doing. So it's a whole host of strictures that are put in place. In the risk level 3, there could be curtailments on branch expansion, on management compensation, and there could be discretionary action by regulators as well. Lending, whether you curb your lending, that is left to the discretion of the management. So they don't actually put curbs on lending, but generally most managements will move towards lower risk lending once they're under prompt corrective action. Just, closing off the chat, want to leave one thought out there. Now, this has been put in place for a number of banks. Banks we have spoken to since then have said that they continue to lend even though they're under prompt corrective action. And then there is one thought out there that, perhaps this is not strong enough. Perhaps you need to actually do something that restricts the kind of lending that these banks can do. There's an age-old suggestion that had actually come in from Mr. Tarapur, who was the deputy governor a long time, late Mr. Tarapur was the deputy governor a long time back, and that was the concept of narrow banking, and just leaving it out there that perhaps we should consider that. That essentially involves converting these banks into deposit service banks and taking away their lending function entirely. Dramatic suggestion, but it was a suggestion which had been put out by Mr. Tarapur in the previous NPA crisis.
So how do they earn any money?
They earn out of they service deposits, and they wind down their lending book. All additional deposits get parked into government securities. So over a period of time, you de-risk the book, and eventually you wind down the bank.
So then you're only whatever little service charge you get.
You're a payment bank, right? You become a payment bank.
So that's it. Nothing else at all. Wow.
So look, talking about the impact on markets, actually, probably there could be some negative impact on OBC share. But, one more PSU bank entering into the prompt corrective action. And like Ira mentioned that there is no restriction on lending, but usually you will go slow on lending or there could be a freeze in the short term. So which means more scope for private sector banks and NBFCs. So it's in a way positive for that segment.
Yeah, well, I suppose so. Let's move on to the other topic, and I'll tell you why we're rushing through this conversation on OBC. And that's because we've got an important guest with us this morning. Now, the textile sector has been hard hit by GST. Also exports have not been doing very, very well. We're also on the anvil of festival season, and we're hoping that maybe things will look better for the textile sector from here on. Joining us on the phone line is a doyen from the sector, Sanjay Lalbhai, the chairman and managing director at Arvind. Good morning, Mr. Lalbhai. Thank you very much for joining us here at BloombergQuint. Let me start by asking you how you'd characterize the current environment for the textile industry, given that you've had some challenges in the face of GST, and exports as a whole, including textile exports, have not been doing very well.
The challenge is more because of compliance issues. If you are in the formal economy, then the people who've always operated in the formal economy and compliant economy are finding GST and they've welcomed it. If you were non-compliant, then there are challenges, of course. But as you would understand that there is no solution to that, they will have to fall in line. This is one of the most game-changing reform which has taken place. And we believe that long-term, people who are compliant, which are in formal economy, should do very well, because now it is a level playing field. And through excellence and through hard work, you could succeed. So yes, there would be challenges, because there was a substantial part of textile industry which was operating in the non-compliant zone. As far as exports are concerned, again, the working capital and the money getting blocked because of IGST refund issues, those have been addressed. So that was one of the major contention of small and medium scale exporters, and which was very valid. So we are very happy that the government has addressed that. The other major challenge which the industry is facing is because of the strong rupee. And we believe that a strong rupee is not only an issue with exports, but the entire Make in India proposition is likely to get challenged, because the imports have also become substantially cheap. There are two issues which have happened. There is a 7 to 8% appreciation of rupee, and there is a 6 to 7% depreciation of yuan in China. And China, being the factory to the world, is really a very competitive manufacturing hub for the world. And with this double kind of whammy, imports have become substantially cheap. So I think if you have to look at exports, more than anything else, the strong rupee is going to pose a challenge.
Mr. Lalbhai, could you give us an estimation of what kind of impact this would have had on your company's financials in the quarter that just got done?
We are doing pretty well on exports, and because we hedge our positions, in the short run, we are not likely to be impacted, because we would have taken a call last year on the currency. But going forward, we'll have to see as to whether all the other costs are also would moderate because of a strong rupee. See, the raw materials moderate because our cotton gets exported. The polyester and man-made fibers also get adjusted to the world prices. So when you have a strong currency, your input costs also go down. But they don't go down in at the same level. So in the long run, it could be an issue. In the short run, it's not really posing a major challenge to us.
In the long run, how dramatically could it impact your margins, sir?
As I'm saying, very difficult to say because our input costs would go down. We will try and we have we could work with product mix, customer mix to ensure that our margins are protected. But as you would appreciate, Menka, that it's very difficult to really figure out as to whether it will have an impact or not. We are again constantly, our foreign desk looks at rupee and the forward premiums are 5 to 7%. And luckily the rupee has depreciated a little bit in the last a month or so. So on the whole, with cotton prices moderating because of bumper crop globally and the rupee adjusting a little bit and the forwards looking good, we're not as concerned as we were a month back.
What's the outlook on the demand front, sir? We're heading into festival season. It's been, sort of a difficult set of economic data to try and decode in terms of where the economy is. The consumer demand seems to be holding up. How are you looking at the festival season, the months to come in terms of consumer demand and what that means for your brands?
Right. I think the demand is reasonably robust. It is a question of share of the wallet. So we have to closely see as to, with all the EMIs and the white goods and the electronics and the cars doing exceptionally well, what's happening to share of the wallet. But otherwise, as far as the demand for our category of products are concerned, all our brands is concerned, is pretty, as per our expectation. I wouldn't say it's a stellar kind of Diwali because multiple forces have come into play. It's nothing to do with the demand or consumption, but it is something to do with the share of the wallet. And so GST and demonetization is, I think, behind. And that's not, I think, creating any kind of major hurdle in the kind of strong demand which the festival should have. It would be a question of share of the wallet. So these 2 weeks today is a great day, an important day. The next Saturday, Sunday is going to be very critical. But broadly, we are on course.
One last question, Mr. Lalbhai. Like you mentioned, some part of trade is probably formalized and is not really affected. But the other part, which is not yet formalized, and that is from where we are probably getting lots of complaints about compliance and all. Is it possible to quantify it in terms of what proportion of sales gets impacted or what kind of loss has the industry suffered?
As you would appreciate, the informal economy was never part of any numbers, correct? So that's one of the biggest challenges our industry faces as to there is an informal economy which was never recorded. Having said that, they have a huge opportunity because these are great entrepreneurs with great abilities. And if they were to get into the formal ecosystem, they would be able to work in the entire value chain and prosper. But it's just a question of changing the mindset and accepting finally that, the means by which your business model is changing and you need to adapt.
Mr. Lalbhai, you made a reference to, some of the relief that the GST Council has offered exporters recently, or as of last Friday. But, I think the proof of the pudding will be in the eating. They've said that they're going to expedite refunds, and it's only for merchant exporters that they've applied a 0.1% rate. So do you expect that this relief, if the refunds come in on time, will be granted, but if not, will continue to be a sticky working capital issue for and is it impacting companies like yours, or is it mostly smaller traders or smaller exporters?
It would be the smaller people. Of course, it would impact us, but our cost of carrying or the refund is pretty small to the entire kind of cost structure. So it doesn't hurt us. We don't like working capital going up. So to that extent, it's an irritant, but it has no dramatic financial implications on our numbers or or anything of that sort. But we are very confident that the government is taking into account all these issues and very quickly trying to resolve them. So we are very confident that these problems will be behind us. Even the inverted duty in polyester and man-made fibers, they've reduced the input duty from 16 to 12. So all the issues which have been raised by the industry have been broadly addressed. And I must say that the government is reasonably receptive on all these issues.
That's excellent to hear. One final question. What can you leave us with in terms of an update on several of your business plans? For instance, I know earlier in the year you were talking about the advanced materials division, and how that will grow out. New brands in the pipeline, new retail plans in the pipeline?
I think we are very buoyant on all these things. Our advanced material division is growing more than 30-40%. And it is EBITDA positive, and it's likely to become a reasonably important part of our textile business. We are going vertical, and we are becoming part of the supply chain to the 10 biggest retailers and brands in the world. So starting from the raw material all the way to garmenting, we are going completely vertical, and as a result, we'll become part of their value chain. So that we are very buoyant about. And as far as our brands and retail is concerned, I think more than the newer things, because as you know, we have quite a few initiatives in place. We want to now become dominant, profitable, and we want to, in every new businesses which we have started, because the mature brands are delivering stellar kind of numbers, but the newer initiatives always usually bleed and then they stabilize and then they give you the right EBITDAs. So now the whole objective is to get the whole portfolio to become equally profitable and grow it at a handsome 20-30% top line year in, year out. So that's the objective as far as the brands and retail format is concerned.
And how large is the AMD business now?
AMD would be touching around 700 crores.
All right.
And so at that rate, I mean, if we are growing at 30 to 50%, I mean, that's a handsome growth for a base which is not very large, but could become substantial in the coming years.
All right, Mr. Lalbhai, we'll leave it there. We appreciate you speaking with us this morning on BloombergQuint. Sanjay Lalbhai there saying the demand outlook not looking very bad in the onset of the festival season, and many of the GST-related issues now getting sorted out with the government taking and the GST Council taking a proactive stand.
Some positive developments for textile industry. But moving on to Tata Group now. According to an Economic Times report, the Tata Group might shut its debt-laden telecom arm by the end of the current financial year. Somit Sarkar is standing by with some analysis on reasons for such a move. Morning, Somit.
Good morning. Exiting the telecom business would actually work in favor of the Tata Group because if you see, they have been losing subscriber base, their revenue market share has been falling, the debt on the books is massive. So let's see what could be the possible reason. First, Tata Teleservices is the telecom arm of Tata Group, and they also own around 37% in another listed entity called Tata Teleservices Maharashtra. So if you list down the reasons, the first could be the fall in subscriber base. So if you see, the company's subscriber base has fallen to 42 million subscribers in July 2017 from 49 million subscribers in March 2017. Also, the subscriber market share has come down to 3.5% from 4.2%. Now, along with this, the company has also been losing revenue market share. For the first quarter of financial year 2018, company's revenue market share stood at 5.9%, down from 6.7% in first quarter of financial year 2017. Now, this could be one of the important reasons for Tata Group to exit the telecom business, that is weak spectrum portfolio. Now, the company has around 194 megahertz of spectrum across three bands, that is 1800, 1800, 800 and 2100. Now, most of this spectrum is administered and is expiring by 2021. Now, along with this, the company's financials have also been worsening. Now, for the financial year 2017, the company's revenue stood at 9,682 crore, down 10%, while the net loss before exceptional item widened to 3,100 crore from 2,000 crore. Now, along with this, the company has a massive total debt of 34,700 777 crore and a negative equity of more than 12,000 crore as of 31st March 2017. Now, three listed Tata companies own share in Tata Teleservices, that is Tata Communication, Tata Power and Tata Steel. Tata Sons owns around 48% in the company. And however, Tata Sons has still not confirmed this news, and they are saying that as far as Tata Teleservices is concerned, the group is examining all possible options at this point.
Yeah, well, I think if they do wind down, as the Economic Times reports, then all of these three companies, the group companies that own a stake in this
have to bear
business.
part of this loss.
Well, yeah, the Tata Communications will have to bear the biggest part of it, yeah? A 7% equity hit, right? So you take the hit on whatever that is worth because it becomes virtually worth nothing.
Worthless.
Right? Yeah, well, interesting. That's the Tata Telecom business, which has been struggling for a very long time. I think we should make a quick comment here on what Tatas have said as a response to us. I think all the reports saying that the group is examining all options at this point in time. So that's important to keep in mind. It's not necessarily a done deal.
All right, I think that's all we have time for on First Word, but stay tuned to BloombergQuint. We talk markets with Yogesh Mehta of Motilal Oswal Securities. That's coming up later in the show. Consumer sentiment with Hemant Mallik of ITC, of the foods division at ITC. And we'll take stock of GST as 100 days pass. We as Parthasarathy of M&M and Harishanker Subramaniam of EY will join us on the show.
Well, a full tilt towards today's trade then. Let's take a look at the derivative space. Navneet Saluja is standing by with the FNO setup. Navneet?
Hi Pradeep, good morning. Well, just a recap as to what happened on Friday. We almost ended at day's high, 90 points gain coming for Nifty. For the week, Nifty was up almost 190 points. Look at the futures. They closed above that crucial mark of 10,000 and even the premium went up to almost 24 points, but no major build-up was seen. As you can see, the open interest was just about flattish. But have a look at Bank Nifty, which did surge on Friday, and the gains were largely led by the PSU banking space. But mind you, Bank Nifty has been underperforming Nifty in that last 5 trading session. It has been stuck in the 230 point range of almost 24,000 to 24,230. It needs to break that range for any kind of further upside for Bank Nifty. The open interest was also down by about 6.5%. Importantly, what is supporting the markets? The India Volatility Index was down for the 6th trading session, so that's definitely supporting the markets. On Friday, it was down almost 5%. Let's look at then how the put-call ratio has been stacking up. For Nifty, it went up to almost 1.37. For Bank Nifty also, we did see some sort of surge coming about. And why did the Nifty PCR go up? Well, clearly the most active strikes will tell you why that happened. The 10,000 call strike unwound nearly 6 lakh shares. The 9,900 and the 10,000 put continue to see put writing. And it's not only 99, the 97, 9,800 put strike also saw some sort of writing coming about. And on the call side, we've seen writing coming for the 10,100 strike. Clearly, the range for the Nifty remains 9,800 to 10,000. But for the day, on the downside, watch out for that 99.20 mark. That's crucial for today's trading session. In terms of for the FIs have been doing well, good news. They've been selling in the cash, but some sort of long positions were seen on the futures side. They added almost 4,500 contracts for the index futures. Even if you look at the options data, they added more of calls and they wrote more of puts. So that's definitely a positive sign in terms of what the FIs have been doing. They've been hedging themselves in the futures and options market. Lastly, just 2 stocks, keep an eye on that. GAIL has been doing pretty well, and I've been observing on the futures side, there's been good build-up coming about. So on Friday also there were fresh long positions seen for GAIL. And lastly, also keep an eye on Granules. That stock was up on Friday, up almost 6%, and the open interest also rose by 18%. But nevertheless, Pradeep, SGX Nifty today is suggesting a negative start.
Yeah, so let's see what happens now, because 10,000, they call unwinding meant that probably the door is opened up for further upside. So we'll watch out for tomorrow for today's trade as it begins at 9 o'clock. Thanks, Navneet, for all the details. But let's get in some FNO strategies from Abhijit Pathak, Director at Defense Edge Solutions. Abhijit, good morning. How would you read this data, and what does your chart really suggest? What is the strategy on Nifty today?
Yeah, Nifty is still strong as long as on the Nifty futures 99.50 or 99.60 is held. As long as it is above that, it is strong and it can go again back to 10.025, which might act as a resistance because of the open interest in 10,000 calls. But I believe that might be crossed in a couple of days. But the time has come now for Bank Nifty to perform, or rather outperform, because it has been underperforming for quite a long time, almost 2 weeks now. So Bank Nifty needs to cross 24,300 on the futures, beyond which it can rise maybe even up to 500 points more.
Okay, so you're not so optimistic on Nifty Bank, but is there a stock you would like to trade today? What would be your top pick?
Yeah, I would like to look at ICICI Bank because even on Friday, although the US market was quite flat and almost slightly negative, ICICI Bank ADR gave a very bullish closing in the US market. So I think today also it might show something similar over here. So if it is available at 271, 273 futures, it can go up to 280 or 285 in the next few days.
Well, some of the stocks, if you look at, metal and commodity stocks in general have been very strong. If you look at Friday's trade, Tata Steel saw strong long build-up. Do you see a trade there? Is there still an opportunity to go long?
Yeah, Tata Steel actually has, at least on the futures, it has broken out above 695. So if that holds, that 690, 695, which was a resistance earlier, if that holds, Tata Steel can rise even further, maybe beyond 700.
Okay. So that's the call on Tata Steel. What about GAIL? This is the top performer of last week actually with strong long build-up.
Yeah, actually GAIL has been going up and it has a small resistance at 460 futures. But then if that is crossed, maybe even up to 500 might be a safe bet on GAIL. It's a very bullish stock right now.
Okay. Well, thanks a lot for joining us this morning. And joining us now in the studio is T.S. Harihar, founder and chief executive of HRBV Client Solutions. Harihar, good morning. First of all, what's your take on markets? For last week's rally, especially the Friday's move was in a big way kind of driven by the expectations that there would be several announcements from GST Council. Do you think the announcements were good enough to take markets further up, maybe beyond 10,000?
See, I think the highlights of the GST meeting addresses two very critical aspects. The first, of course, was the SMEs, where there was a maximum complaints as far as the compliance was concerned. I think that has been substantially addressed, if not entirely addressed. The second big constituency was the exporters. And I think for exporters, the big issue was handling their liquidity and the working capital before they get the ITC credit. So I think that has also been substantially addressed. There have been some reduction in duties and there have been controversies over that, but I think that is something we can leave aside for the time being. I'm positive on GST because two of the major constituents, that is exporters and SMEs, which actually constitutes the bulk of the problems that GST faced, I think that has been addressed. So that should be, I think, a positive as far as market sentiments are concerned. Okay. If you look at some of the stocks that will focus on in today's trade, there are some announcements with regard to specific industries, like there is some announcement for filament yarn players, there is some announcement for gems and jewelry players, which is separate from the GST related announcements. Any specific pocket that you like in today's trade? I think gems and jewelry, as you rightly said, Titan could be one area we can look at. It's quoting at about 580, 590. But I think with the new announcements on the gems and jewelry side, I think Titan could actually be one stock we can look out for the target of about 650 on the upside. Okay. And Indian Energy Exchange IPO opens for subscription today. We'll be watching out for that. The country's first and largest power exchange is looking to raise 1,000 crore rupees. Jayesh Khilnani standing by is here with more on financials and other details. Morning, Jayesh.
Morning, Pradeep. So one of the key points is that this is one of the few companies which does not have a promoter. In fact, it is backed by PE players who are now looking to exit the company via the IPO mode. Now looking at the subscription that we have, so it is priced in the band of 1645 to about 1650 rupees, and the offer size is just over 60 lakh shares, which constitutes to about 20% of the capital that they have. Now post at the upper end of the price band, this will command a market cap of about 5,000 odd crores, which is also in line with the other exchanges that we have listed on the Indian exchanges. Now moving on to the sellers that we have, like I was telling you, this is primarily backed by PE players. So multiple private equity wants to sell about 25 odd lakh shares, and also Tata Power Company is looking to sell about 12.5 lakh shares. Now these are some of the top shareholders that are looking to exit the company. Moving on to the financials of the company, very steady revenue growth we have seen for this company. FY13 they had a revenue of about 138 crores, and currently they've reported about 237 crores. That's about a 14.5% CAGR for the revenue. And now for the net profit also, a similar kind of experience the share, that it has grown from about 66 crores to about 130 crores. That is a CAGR of just above 13.5%. The margin picture is actually, where there would be some concerns that the market would have. It has dipped from about 76% to about 74.5% on the margins. Now, like I was telling you that this is the first power exchange that we have in India. So not really comparable to the other exchanges that we have. But if you want to have a look at what the other exchanges do, that's there on your screen. So BSE has a price to book of about 2 times, MCX at about 4 times, while IEX is commanding price to book valuation of about 18 odd times. Now, Pradeep, I also read about a few of the brokerage houses that have coverage on this particular IPO, and most of them in fact have a subscribe rating. So KR Choksi, Angel Broking and Prabhudas Leeladhar all have a subscribed rating. However, one of the key concerns that has been pointed out is that maybe this IPO is fully priced as in terms of the band that has been given.
Well, thanks, Jayesh, for all these details. Harihar, any views on this IPO? And also, I think Tata Power would stand to gain, being a shareholder who is selling stake.
Yes, and I think, you're right. Tata Power is definitely looking at coming out of IEX, as part of the offer for sale. But I think my immediate concern when I saw this was the valuations look to be a little steep. So probably there could be some kind of a novelty value when the stock gets listed, like what happened when a BSE got listed or an MCX got listed. There is an element of novelty value because there is really no other product of a similar category. But if you look at exchanges in India or even exchanges abroad, I think both the P and the PBV look to me a little steep at this point of time. So probably, you would get some very marginal listing gains, but nothing beyond that I can see on the table.
So nothing much left on the table?
No, nothing much.
Nothing at the valuation. Well, let's go across to our research team now and see what are the other stocks they are watching for, the key announcements, and also the all-important reports that came out. Darshan, to begin with, Spark has failed to reach a milestone.
Yeah, that was one of the drugs that they were working on. So the test that they did, and that was on a sample of 293 people, that has actually failed to meet the specification. So that's a negative that's coming in on Spark. Sun Pharma is the manufacturing and marketing partner. So both these companies will be negatively impacted. So that's the news. There was a report that came out, and that was Morgan Stanley, and they are saying that the management had indicated by the end of FY18 they expected to out-license this molecule. Probably that will not happen, and they were expecting that in case these positive trials to come in the first quarter of next financial year, they wanted to actually file an NDA filing on this one. So that will also not happen. The peak sales for this drug was close to $100 million. Apart from it, this was the key product in Spark's pipeline, but that will now, the commercialization will definitely not happen. So negative news that is coming in on Spark. The management will hold a conference call today at 4 o'clock wherein more details will be discussed. But nevertheless, the news is negative for Spark.
But some good news for Sobha, Nikki.
Yeah, so total sales volume have risen as much as 0.6% at 8.61 lakh square feet as compared to 8.55. Sequentially, it is a 5.6% growth. But then the real good news is in terms of new sales value. Now, that's the highest in the past 10 quarters. It's up as much as 14% on YOY basis at 592.2 crore as compared to 518 in the corresponding quarter of the previous year. Sequentially, it has grown as much as 5.3%. Price realization per square feet has gone up 14% YOY. On sequential basis is almost stable. In fact, it's a marginal dip coming in at 0.28%. What brokerages have to say on this? Axis Capital, it says 2 points. It's a positive that the company has not reduced any prices, and there is also ruled out the possibility of any further correction going forward. Also going forward, it expects a continued revival in sales in terms of new projects in Q3 FY18. CLSA also is positive on this for that matter. It says that steady execution, good project portfolio has helped the company to perform well during the past transition times, and it also expects the pre-sales to continue to do well for the coming few quarters.
Well, Shraddha, what else is in news today?
Well, continuing with Friday's GST tweak, we also had a reduction in the man-made GST rates on man-made yarn from 18% to 12%. So on the back of that, you will see names like RSWN, Sutlej, Siaram Silk, you have Sangam India, all of these which could react positively in trade today. You also have positive news coming for Shilpa Medicare, where the US drug regulator has issued a EIR for its Telangana facility. That means complete clearance. You also have JMC projects which will be in focus because its subsidiary Bridge Bhumi Expressway has won an arbitration of about 42 crores. Sagar Cement's strong September sales numbers, which grew 38%. Repro India, now printing and stationery company, small company, trades on very low volumes, but they have approved fundraising by issuing shares or warrants to investors other than promoters. So they're looking to raise up to 80 crores, so they might see some reaction there. And lastly, Granules India on the back of bulk deals, where Morgan Stanley France sold 0.77% stake on Friday.
Well, Sumit, this is kind of a season of value unlocking. So from Birlas to ADAGA and now Adani.
Yeah. So now Adani Enterprise will be transferring its renewable power business to an associate company, that is Adani Green Energy Limited. Also the associate company, that is AGL, will be listed on the exchanges. Now AGL will issue around 761 equity shares of 10 rupees each to every 1,000 equity shares of rupees 1 each of AEL. In short, they'll give 7.61 equity shares to every 1 equity shares of Adani Enterprise. Now the renewable power business nearly contributed around 800 crore to Adani Enterprises revenue, that is what, around 9.5% of the total turnover of the company. Also the scheme has received board's approval, but it will still require further approvals from the exchanges, SEBI, shareholders and the creditors. Now Adani has the largest renewable power portfolio of 2,148 megawatts in India, and the entire capacity has been tied up with for a 25-year power purchase agreement for the company.
Well, thanks a lot for all of you. All these details, and we'll keep track of these stocks. Hari, to begin with, Adani Group, do you have a call on Adani Enterprises? Have you looked at this news, or which are the stocks in this group that you actually like?
See, Adani Ports SEZ is probably one stock where I feel that it could benefit largely from the improvement in the volume of trade in the Mundra port. Other than that, I have a little concern in the Adani Group over the kind of protests that we are seeing across Australia. Because what is going to happen is the Adani Group has committed about $16 to $17 billion of investments as far as the Australian coal mining project is concerned. And I think if that is likely to get delayed, there is a lot of ROI of the company group that is going to get delayed. So at the current moment, I think I'm a little more worried about the Australian protests rather than anything else. I think within the group, yes, Adani SEZ continues to be an extremely good stock even at these levels. Okay.
Also joining us now in the show is Mukesh Singh, head of technical research. Mukesh, what's your take on Adani Group, especially Adani Enterprises? If you have looked at the chart, is there a trade technically?
Morning, Pradeep. Adani Enterprises, as I see on the charts, is for last 6 to 8 months is contained within this broad range of 144 to 110. It's going nowhere, and I think based on this news flow, it can pop higher towards that. If it moves higher towards that 140, 145 area, it would be a good time to book profits in long positions and wait for a dip around 115, then to initiate the fresh longs again. It is going nowhere. It is contained in this broad triangle, which has been the chart shaping up for last 5 to 6 months.
Okay. Well, Vishwesh Chauhan is also joining us, head of quantitative research at Monarch Net Worth Capital. Vishwesh, good morning. First of all, what's your take on markets?
Good morning, Pradeep. See, by and large, we believe that we are still in the range, the kind of bounce back we are seeing from the 9700. In my opinion, that is sort of a retracement because a lot of the indices has a 5-way fall. The way open interest has been adding into the future, that is clearly indicating it is not the very heavy built up. We have a few concerns as to FI is not, building the position on the long side. So the way we are suggesting to our clients, and we also feel that that would be the decent way to, trade this market, is you should have a, neutral strategy hedging option wherein you would create some sort of a short wall stance right now, because volatility is definitely not spiking, and at the same time you would want to play short theta. So either the at the money straddle of around 9800 or probably some sort of a strangle of 9800 and 10,200, I would suggest you to short that. And on the other hand, you would create a neutral position in the stocks as well as the future. So you could short some stock, at the same time you could buy some stock. So stocks with the high dividend yield right now looking as very attractive in this scenario where we are not having to see interest rate going up. So Coal India looks good. At the same time, some of the stock which have witnessed some sort of a shorting and post that facing a pullback, we are recommending short there. So like a Voltas is good short. So overall neutral stance on index, and try to long short basket on the stocks.
Okay, and you also have a call on Voltas.
Yeah, so we feel that from the highs, Voltas has witnessed some sort of a 5F decline. Now you might be aware that when the 5F decline comes, and there is definitely a counter move comes, and that counter move in the Voltas at this moment is looking like a 3-wave correcting pattern. So the target of this pattern is coming very down, in the way we are reading into data that seasonality is not in favor of the Voltas, especially the month of October and all, because now the probably the winter may start. So I think with a stop loss of 560, if one shorts, or probably try to create some sort of a negative bias strategy via option, then we are expecting an initial target of 480 in Voltas.
Okay, Mukesh, you have a call on Britannia this morning. What kind of upside do you see there?
Yeah, Britannia seems to be behaving pretty well on the charts. The relative strength over there is quite terrific as far as compared to the overall market, and it has been just consolidating in a very tight range, and if prices start trading above 43.72 in today's trading session, then I expect a breakout of this tight range, and in that case the prices can head towards 4,500 target area. If a buy is triggered above 43.72, then I would advise traders to keep stop below 43.20.
Okay, so that's the call on Britannia. Now on to our special segment, Bloomberg Edge. Reliance Industries ended in the green zone for all 4 sessions last week. Jayesh Khildani is here with more insight on this counter. Jayesh, hi. Will there be a further rally in Reliance? What does your pattern really say?
Looks like, Pradeep, Reliance Industries are headed for higher grounds from here on. That is because the trender has turned positive with Friday's close. Now, let's first have a look at what the trender actually does. Well, it's a proprietary Bloomberg indicator which uses average true range as one of the key inputs for calculation. It helps you to give a buy or a sell signal, and also shows you where the trailing stop loss should be. Now, the buy and sell signals are generated when there is a color change. So from red to green is a buy signal, and the other way around, a sell signal is generated when the color changes from green to red. Now, going back to the chart of Reliance Industries that we have, we can see that as of Friday's close, this actual last candle has closed above the red line, which is the previous trender that was on the downtrend, which indicates that there would be a possible uptrend from here onwards. In the last 6 months, we have seen that a few times the trender has turned positive, and it has worked favorably in Reliance Industries. So maybe this time around as well, we could see higher prices come in for Reliance.
That's true. In fact, this proprietary Bloomberg indicator has worked for several other stocks that we have discussed over last few weeks. But have you tried to look at what is the kind of strike rate? What is the success ratio?
So, Pradeep, as you can see on the chart, the last 4 times that the trender has turned positive, we've seen about 10 to 15% move come in for Reliance.
Okay. Thanks a lot, Jayesh, for this detailed Reliance Industries. Well, that is one heavyweight that could, drive Nifty up 10,000 mark single-handedly. But Vishwesh, do you think traders are, option traders, are positioned for further upside on Reliance?
I think so. See, you have to have a little big horizon, in my opinion, because in a very short term, I think stock does look good, and probably it can go till 860. So I think the best way to trade Reliance at this point is via some sort of an option, in my opinion, because in Reliance options are fairly liquid, so probably some sort of a ratio spread if somebody would like to initiate. So I would suggest buy 840 call option, and probably you would want to sell 3 lots of 860, or for that matter even a 800 or 900 call option. So 900 call option is around 4 rupees, and if you see the 840 call option is around 18 rupees. So net you would get a 16 rupees credit if you short the 900 call option. So roughly around a 3 lot if you do, then you will get a 12 rupees credit, and on a 840 call option you will get around 18 rupees of debit. So your net spread would be around a 6 odd rupees. So your break even would be just 846, and I think that is a fairly decent assumption in the scenario where we feel that Nifty is in a resistance area. So we would not advise creating a lot of debit strategy.
Okay. And Reliance Industries is in news today as well. It's planning to sell Pennsylvania upstream assets for $126 million. So that could be a driver for this stock. But also in news is JP Associates are here. They're planning to deleverage. They want to hive off certain assets and also roughly 12,000 crore rupees of debt into a separate company. Have you looked at it? Any views on JP Associates?
See, I have been tracking the company from the time it had a debt of about 70,000 crores about a few months back, and I think it has managed to use some of its cement sale proceeds to reduce the debt. The big problem for the company is that the debt is still too high. If you compare the debt of the company with the market cap, the debt is roughly about probably, I think, 6 to 7 times the market cap of the company. So that, I think, is a major worry as far as JP is concerned. Our bigger question as far as JP is concerned is that, okay, if they hive off all their core assets, then what are they going to be left with? So I think that's a big question we need to answer. But yes, we are not exactly too positive on the stock at these levels.
Mm-hmm. And also gems and jewelry and gold finance companies, if you have had a look at these companies, good news because PMLA norms have been relaxed from 50,000 to the threshold for customer to reveal his identity has gone up to 2 lakhs.
See, the PMLA norms may not impact the gold finance companies so much. For them, it will be more about what the RBI does in terms of compliance, because that is a more important consideration for them.
So I thought more jewelry sales would mean more business.
Yes, you're right. I think as far as companies like a PC Jewelers or Titan is concerned, I think a lot of them are facing hassles because entry-level buyers of gold did not want to get into the practice of revealing their PAN numbers. So I think this will definitely go some way in improving the sentiments, and we've already seen the demand for gold picking up. So I think, yes, we could see a good time as far as jewelry stocks are concerned.
Okay, now moving on to RPG Group. The group was split almost in half 4 years back after the family patriarch Ramaprasad Goenka passed away, while his elder son Harsh Goenka inherited companies like CEAT and KEC International. The younger son Sanjeev Goenka got CSC and Saregama, among others. A lot has changed over the years, with RP Goenka grandchildren now taking active interest in their father's companies. So how have the two groups performed? Yatin Mota is standing by with details. Morning, Yatin.
Morning, Pradeep, and thanks for that. And starting with the interesting facts about Harsh Goenka and Sanjeev Goenka, and starting with Harsh Goenka first. We have his group companies which are extremely doing well. Of course, if you look at the one-year performance for his large cap companies, the things are really working out as far as Harsh Goenka is concerned. And CEAT, that is one flagship company of Harsh Goenka which has been doing quite well. In fact, if you look at CEAT, the key triggers have been the rising tire demand, and not only that, recently we have the government which imposed anti-dumping duty as far as Chinese tires are concerned, which augurs well for the business. What's not working for them is Zensar and RPG Life. Both of these companies have been lagging in terms of the performance, almost 20% down for them as far as the one-year performance is concerned. Of course, the quarterly performance also remains quite weak as far as Zensar is concerned, and for RPG Life also the case is more or less similar. Of course, KEC International, that is one company wherein we have seen a significant amount of rise in market capitalization. Of course, the recent orders from the power sector and also rising earnings visibility is something which has kept the stock abuzz. KEC International, that is the stock I'm talking about. Coming to Sanjeev Goenka Group, there also we have seen some interesting facts. Remember, we have CESC, the flagship company, which is planning to split the business in 3 parts. Of course, the restructuring is ongoing as we speak. but that is the key interest point area for the investors, because of which the stock is quite active. Also, Philips Carbon, that is one stock which has seen a significant amount of return in the last 1 year or so. Of course, new capacity expansion and new product launches, something because of which we have seen a big boost and fillip to the earnings. Saregama also, that is one stock. Despite weak earnings, we have seen the stock also perform better. So Saregama is something wherein the market is expecting the content library monetization could drive the earnings moving forward. Now let's see both of these group companies or the groups in isolation. If you have the Goenka Group, 66% return for Sanjeev Goenka Group and 36.5% return for Goenka Group. If you look at the market capitalization of the listed entities, so good returns seen there. And finally, if you look at the final slide, you'll come to know that both Sanjeev Goenka and Goenka's market capitalization is close to 20,000 crores. Of course, this is the final scorecard, but if you look at both of the group companies, 20,000 crores in terms of market capitalization, but we have Sanjeev Goenka, which has added almost 8,000 crores in terms of market capitalization in the last 1 year or so.
Thanks, Yatin, for all these details, and the most interesting value unlocking will be seen in CESC, so we'll keep an eye on it and also discuss with our guests. But let's look at what's happening to the market right now. Pre-open session has started, and 98.40 is the level that I see on Nifty. On Sensex, we have 32,000, well, 270 points up. We'll have to wait for it. I think Nifty is probably also now down by 140 points. So these are exaggerated levels, so to say. Let's look at what's happening to Reliance, the stock which is in news and also is giving positive technical indicators. Well, Gas Authority or GAIL is another stock to watch out for among heavyweights, and let's see what's happening to that one. Look at Bank Nifty and especially Oriental Bank of Commerce because of the action taken by RBI. The prompt corrective action will have some negative impact on this stock. I believe it's down by 10%. Will it really fall 10% in out? But yes, there will be some negative impact. What happens to other PSU banks? This is also interesting because the high NPA banks like PNB, you'll have the smaller banks also reacting to this. There are quite a bit mid-cap PSU banks already under the prompt corrective action, so they may not react to it. JP Associates is stock to watch out for. Adani Enterprises is a stock to watch out for, and Z Enterprises. So let's look at what's happening into some of these stocks. Adani is actually down, and Z has gained 2.5% following the acquisition. Spark or Sun Pharma Advanced Research is the stock that we discussed earlier with Darshan. The company has failed to achieve a key milestone, but no reaction as of now. Shilpa Medicare gets US FDA EIR for their Telangana facility. Another mid-cap pharma company. Reaction is muted, just 2.5%. And also you look at Mindtree, where the board has approved a scheme of amalgamation. What's happening to that? Let's also pull up some of the gems and jewelry stocks. Titan, PC Jewelers, and the smaller ones like Tangamail Jewelry. What is happening there? Titan is up 10%. Well, we'll have to see whether that holds. This is just early trade, and I guess too early to say how these stocks are going to hold through the day. Let's also pull up rupee. Rupee has been quite volatile against dollar over last 1 week. We saw a steep decline, then a pullback, and then again some pressure, 65.34. So this is a gain of roughly 3 paise on this one. Well, before we go across to our guest and discuss and take their views on some of the buzzing stocks this morning, Saloni Dhanuka is standing by with the big brokerage calls of the day. Saloni.
Nomura has maintained a neutral rating on M&M Finance. However, they have raised the target price to rupees 460 from 360 as they expect return on equity to improve to 16% by FY20. They also believe that the company is well positioned for a rural recovery, and they expect the credit growth to pick up at a compounded annual growth rate of 16 to 18% through FY17 to FY20. Secondly, Nomura has upgraded Godrej Consumers to neutral neutral from reduce, and they have hiked the target price to rupees 990 from 945 rupees. They expect a rebound in Indian consumers market as well as strong growth in African markets. On the flip side, they believe that macroeconomic challenges in Latin America, Indonesia and Europe could weigh on the company. Now moving to Zee Entertainment, the company has acquired 9X Media and its subsidiary INX Music for 160 crore rupees in an all-cash consideration deal. Now 9X Media, which is popularly known as 9XM, operates 6 music channels, 3 in Hindi, 1 in English and other regional languages as well, that is Marathi as well as Punjabi. Now few brokerages have come up with a note particularly on this transaction. Firstly, IDFC believes that this transaction would add another 3% to Zee's consolidated revenues and from the first year itself, and given Zee's strong foothold in the entertainment space, they believe that this will bring cost synergies for the company. Secondly, Macquarie believes that this acquisition will give Zee a strong foothold in the regional as well as digital space, and they expect Zee to continue to deliver margins over 30%. While UBS believes the acquisition cost is reasonable considering 9XM's revenue scale, and addition of 6 new music channels will enhance Zee's current portfolio of 33 channels. And lastly, Citi believes that this is a strategic expansion as the management looks to enter into the regional as well as niche segments. Pradeep.
Well, thanks, Saloni, for all these details. So these are the stocks that top brokerages are recommending this morning. But Hari, what are you recommending?
See, in terms of specific stocks, there are actually 2 stocks we are looking at. The first, of course, is GAIL, and I think we discussed that very briefly before. That's a stock that has been in the midst of all the action ever since the government adopted a more favorable policy towards gas pricing. So we are recommending people to buy GAIL at around 450 or 456, depending on what price it opens at. And instead of keeping a stop loss, we're asking people to buy a lower put option of about 450 strike. So anywhere above 464, 465, you are profitable on this particular counter. We have an internal target of 520 over the next 1 or 2 months, and we believe that this should be probably the best way to play this stock. The second is a new listing, which is SBI Life. The stock actually did not have a very encouraging listing, but I think in the range of about 690 to 695, the stock offers a very good entry point into a business which has much better margins than its life insurance peers. So buy SBI Life at about 695, keep a worst case stop loss of 660, and have an upper side target of about 760 to 770 over a 3 months period.
Okay, so that's the call. SBI Life Insurance and also Gas Authority. These are the 2 stocks that Hari likes with medium to long-term perspective. Gems and jewelry stock, let's take a look at them. And Mukesh, technically, anything that you like in gems and jewelry space?
It will be more of a news-led kind of thing, and I would, if at all, if one has to look at it, then Titan seems to be a bit better placed, as it has pulled back to its longer-term moving averages. And with this particular pullback, the stock seems tight enough to move once again higher. I would be a buyer in the stock if it starts trading above 600. The stop should be placed below 590 for possible retest of 650, 660 kind of rating.
Okay, so here is a buy call on Titan. Stock has opened up roughly 4%. Hari, how do you see the acquisition of 9XM and INX by Zee? Or what would be your call on that one?
See, I think it's a good addition as far as their bouquet of entertainment channels is concerned. But what I understand is, I think in terms of revenue, it will be about 2.5 to 3% is going to be the total accretion. So I'm not sure what is going to be the overall impact as far as Zee is concerned. But yes, definitely, I think it's a sentimental positive because it helps them expand their, what I call the entertainment bouquet. And let's not forget that they have probably the best network. They also integrated backwards into the digital space by having a DTH as part of their portfolio. So if you combine everything, I think this acquisition does look good. But yes, I think the impact would at best be about 5 to 10% of the stock.
Okay. Well, also, if you look at IT stocks, TCS has issued some clarification. Mindtree is also in news today. Vishwesh, any trade you see in IT space also, because on Thursday, TCS will be announcing the quarterly result.
See, I think Pradeep, in a very shorter term, among the large cap IT, I would stick with Infosys, but the Mindtree looks definitely very nice, and I feel that somewhere around 440, the stock may have formed the large base, and I think in a very shorter term, as long as the stock is able to hold above 470 odd, which is nothing but a 3% from the current level, there is a possibility that stock may inch towards the 520. So I think this is the one stock which can be totally dark horse among the IT space. So if I had to pick among the TCS and Mindtree, I would go with the Mindtree.
Okay, so Mindtree is the stock that you like. Hari, now all eyes will be on result season. Interestingly, Infosys has deferred the announcement. They'll be coming out with the result towards the 3rd or 4th week of the month. But TCS will kind of, open the inning for ITs. What's your take? What do you expect?
See, over the last, I would say, probably 8 to 10 quarters, I think the TCS results have been a lot more critical for the, I would call the IT perception as compared to Infosys. And I think that is the trend that is likely to continue. See, I think for me, the TCS margins and the TCS growth would be very critical because, I think they are by far the largest company, both in terms of top line, bottom line, and in terms of market cap. So I think that will set the trend as far as the tone of the IT sector is concerned. And our view is that, while TCS does not give a guidance technically, I think whatever it talks on the market, I think that will be a very, very critical. And our view is that it's likely to be neutral to positive rather than neutral to negative this time.
Neutral to positive. Well, the other key result to watch out for this week would be IndusInd Bank. And because private banks have run up so much, Vishwesh, how do you think traders are positioned so far as IndusInd Bank or the private banking space in general is concerned?
See, apparently somewhere I feel, Pradeep, that private sector is the bank right now, the cause why the bank Nifty is not rising. If you see the recent last 10 days performance, Yes Bank is down, ICICI Bank is down, and IndusInd Bank is down. And what has been taking lead is the some of the public sector banks. So I guess somewhere the pair would be in the play that the public sector banks are now leading and the private sector banks are falling. So I think in a very, very short term, the way I am looking at is IndusInd Bank may consolidate in the range of 1600 to 1750, though it's a broad range, but I think this is where options are liquid in this stock. So probably you may want to write 1740 call option and on the lower side 1600 put option. That is the range, and I think this expiry may be a little lackluster, at least right now looking at the data for the private sector banks.
Okay, so that's the call on private sector. We'll of course have to wait till Thursday for these important results, and then we'll see how markets really react to them. Well, some more stocks to watch out for. Syntex Industries is one because Syntex also benefits from the changes in the duty structure for GST. Syntex is quoting higher by around 2% as of now. Vishwesh, you have a view on this?
See, I think in a very shorter term, entire, this basket stock looks very good, and especially the Syntex, I think the stock may have formed the bottom around 26 odd rupees. So probably it has a potential to go till 32, 34. So somewhere, you can probably form some sort of a bullish, call strategy, or you can simply buy with the stop loss of 26. I think stock is looking very good in the shorter term.
Yep. Well, that's the call on Syntex. To look at some more stocks that would be interesting in today's trade. Let's look at what has finally happened to OBC, Oriental Bank of Commerce, where RBI has initiated action. The stock was quoting lower by 10% in early trade. Now it's down only 3.5%. What really happens when a stock comes into prompt corrective action is that there are curbs on its functioning, dividend payout and things like that. One after the other, PSU stock has been coming under the prompt corrective action. Hari, what's your call on OBC?
Yeah, I think we had IDBI first, then we had UCO, we had IOB, and I think now we have OBC. See, I think the problem with the PCA approach is that banks are given a certain fixed amount of time by which time they need to put their house in order, and more often than not, since the problems are structural, it is unlikely to happen. That means at some point in the future, I would believe that a bank like OBC may be forced to merge into another bank, probably a larger private bank or a larger PSU bank. So I think as far as these heavily stressed banks are concerned, they have a very limited future unless they get kind of bought out by another bank. Because I think recovering from these levels, in my view, with their kind of an asset size, is going to be extremely difficult. So I think any bank, in my view, that gets into PCA, it's kind of end of the road for them.
Yeah, honestly. So we have also seen a prolonged underperformance in IOB and IDBI, the two stocks you mentioned here. Well, pharma is one space where we have seen some kind of an up move or a bounce over last 1 week. It was one of the key performing sector. Now today we have got some positive announcement from Cadila Healthcare, where the stock has, the company has received a US FDA approval as well. What happens to Cadila Healthcare will be interesting to watch out for. Stock is up just 1%. Hari, do you think one can pick and choose some stocks from this sector and start investing, or is it too early?
See, taking a macro view on pharma is still a little difficult, because I think the question marks over the US FDA policy and the future of Obamacare is, I think, still around. So I'm not sure to what extent that is going to happen. But I think, yes, you're right. There are certain pockets like probably a Glenmark or an Aurobindo, which have relatively had lesser problems compared to a Sun Pharma or a Lupin when it comes to the US FDA. So I think, yes, that is definitely something that is positive. And my suggestion is, if you're looking at pharma, try to focus more on the middle level companies like an Aurobindo or a Glenmark, Divi's Labs, rather than the very large cap ones.
Okay, so that's the call. Well, Vishwesh, anything you like in pharma?
I think for some time we've been liking Divi's and Dr. Reddy. I think while we still believe that Dr. Reddy has a long way to go from the current level. But if from an option space, we've been recommending to our client a trade in a Glenmark. We believe that relative to other pharma stock like Oro, Divi's and Dr. Reddy, Glenmark has not yet covered its ground, and around a 612 level, I feel there is a case for at least 10% upside. So the way we are playing this trade is we are buying one lot of 600 rupees call option, and we are selling 3 lot of a 660 call option. So that is the net
markets have
sort of a mild.
Let's see how the Nifty is faring in the early trade. 9991 or 9990, that's the signal from SGX Nifty, but that's the futures. So let's look at what's happening to the cash. 9982 on Nifty, not so bad. Sensex 31865 and Nifty Bank is 24203. So all three indices have opened in positive trade, but are we really getting the latest numbers? Yes. Now look at the mid cap. It's flat. Very, very flat, just up just 12 points. Interestingly, Nifty mid cap and small cap and also Nifty Bank have been lagging the Nifty. So they are still not trying to catch up. The heat map this morning is more red than green, and it's rising. So Nifty has now slipped 3-4 points. Sensex is also looking weak. And well, where is the weakness coming from? You have BPCL, Sun Pharma, ONGC, HPCL. Energy sector was the key driver last week. The index moved up by around 5% or so. But this morning, all these PSUs and also the private sector heavyweight RIL is quoting weak. IOC also in red. So this is one sector, and also there are some more heavyweights from other sectors like Hindalco. Well, commodity markets are also in corrective mode so far as global commodity markets are concerned. So that's the impact on stocks like Hindalco. What happens to, well, on the positive side, let's see. ICICI Bank is up 1.5%. Aurobindo, Tata Steel is positive, thankfully. Yes Bank. So private banks are trying to support. Bajaj Finance also moving up, and IT, Tech Mahindra is up, driven more by news it seems, and also some support from select pharma and FMCG names. That's the scenario so far as Nifty is concerned. What's happening to the broader market? Let's look at the gems and jewelry. First of all, the sector in news because of the relief they received on PMLA regulations. Titan, PC Jewelers, Thangamile and all such stocks like TBZ should come on your screen. Titan is up by around 4%. Thangamile is up 3%. Also Muthoot and Manappuram, because there could be some rub-off on these companies. Tribhuvan Das Bhimji, TBZ is up there, 6%. Muthoot, no reaction so far. Well, Oriental Bank of Commerce, what is the final price now post-open? The OBC opened down by 10% in pre-open session, but recovered a bit, down 3.5% as of now. Let's look at Syntex, Trident, some other such stocks which have benefited from changes in GST norms. And here is Syntex, up 3%. Some smaller stocks like Shakti Pumps, Kirloskar Brothers, these stocks have also benefited because the tax rates have been reduced, and that's a massive reduction from 28% to 18%. So Kirloskar Brothers is up 3% here. Sobha Developers came out with strong sales numbers. Let's see what is the impact on that counter. Sobha is up 7%, so that's interesting. So these are some of the stocks this morning that have opened higher. Vishwesh, early on, have you been able to spot any opportunity?
Nothing actually, Pradeep, but I think some of the stocks in the gems and jewelry stocks does look good, like PC Jewelers for some time now. And other than that, I think metal stocks is something where I'm keeping very close eye on, but not to buy, but definitely to short, because somewhere we believe, Pradeep, that the rise right now, what we have seen from 9600 or 9700 odd, might be corrective pullback, and probably we may head lower. So right now we are not very buying aggressively. At the same time, if we have to buy, we are buying through calls, but we would like to build some short position if we see something. So definitely right now some of the stocks like Voltas I mentioned, probably that is the one stock I'm still keen on shorting, and I feel that there is a downside of 10 odd %. So nothing much to on buy side, something I would look for a shorter as well.
Okay, Hari, what's your view on Sobha?
See, it's a good niche play, and in fact, among the southern-based plays, Sobha is quite strong in Bengaluru and partly in Chennai. See, the demand-supply gap, the way you have seen in places like Gurgaon, to a large extent in Mumbai, it's not that bad in Bengaluru, although the gap is still picking up. But we do believe that with the passage of RERA and Bengaluru being one of the more professional markets, I think it should benefit, and Sobha should be a logical beneficiary of that. So yes, we like Sobha at these prices. We have an internal target of about 480, 500 on that, and I think this could be actually a good level to get into the stock, but have a 6 to 7 months perspective on it.
Okay. Thanks a lot, Hari, for joining us this morning.
Thank you.
And Mukesh, just have a look at logistics stocks. Gati is up around 3.5–4% with good volumes. You also have all cargo logistics, which is buzzing up to 2.5%. Volume is again strong. Snowman also moving up 1.5%. Well, nothing in particular for logistics, but any reform in GST and you see logistics moving up. What's your take?
Snowman, I'm checking the charts. It's hitting multi-month lows around 50–55. So it can have a decent bounce back towards 58–59. But nothing special per se as a sector right now. For today's session, I think, Pradeep, we will be well served if we take a look at this pharma pack. It is going against the grain. Sun Pharma, which was expected to open lower because of negative news flow in Spark, is completely behaving in an opposite manner. And along with this Sun Pharma, you have got Arvind Pharma. So I think something is cooking in this pharma sector for the day per se.
Okay, Mukesh, thanks a lot for joining us, and also Vishwesh. Thanks, we'll take your leave. Let's have a look at Nifty, which is quoting flat this morning, and also Nifty Bank, Sensex, some pressure at higher levels, but indices are trying to hold. There are no major cuts as of now. Yogesh Mehta, Vice President of Retail Research at Motilal Oswal Securities, joins in. Yogesh, every time we move closer to 10,000, a big question comes up, whether or not fundamentally market is in a position to cross and sustain those levels. We have seen sell-offs over the last 2 months, twice or thrice from that level or slightly above 10,000. What's your take now?
Yeah, good morning. See, the thing is, when we have seen August low again in last month, 9685, 9687, and it was a sell-off for 4.5 percentage point. This is based on macroeconomic data, which is getting weaker again post GDP number, which has come at 5.7%, quite a low with the new calculation formula. So that has some disappointed the market. Again, the new developments which will happen from due to GST, there is a slowdown across the industry in the manufacturing segment per se, especially. And secondly, we are ahead of now quarterly Q2 result season now will kickstart from this week. So there is a fear that maybe a slowdown will impact further on the Q2 numbers. Probably what we had been projecting for uptick in the economical upcycle growth, which will again get postponement by maybe next 3 to 6 months further minimum. So that is what it is causing some kind of threat or maybe fear into the market on the higher levels, and we may see that a consolidation will continue for at least Diwali, so next 2 weeks, and at least for next 2 weeks till the results commence and is on. So basically 9680, again 9650 to be tested, and again on the higher side 10,050 would be the ballpark range which is there since last so many weeks.
So to what extent do you think GST has an impact on companies' earning and market sentiment so far, and therefore the clarifications given by the government or several concessions offered to certain sectors, also reduction in GST rates, will it really help?
Whatever GST implementation has been happened in the final draft earlier, so that has given a slowdown impact due to many unorganized sector which is not ready for this kind of a transitional move, which is the largest ever since independence. So that will take some kind of reluctance in their mind and their operations, and we have seen sales has been down significantly for the unorganized sector, wherein organized sector have got a advantage over that the people or the business will shift towards unorganized to organized. But yet we need to see that how to cope up with the new system. So that is why first 2 quarters or so we may see some kind of disruption into supply chain management and of course the revenue on the top line numbers. Whatever amendment which has come off late on the weekend, which will have some kind of a positive relaxation, kind of relief, kind of impact for the businesses, because many things they have reduced some of the rates into GST 27 items, but services business which has been given the mechanism for mechanism also been reverse charge mechanism also has been postponed to 31st March. The filing of paper and the so many of a monthly return filing has been gone to quarterly numbers. So these all will give some kind of flexibility, will show some kind of a flexibility from the government side to really cope up all the businesses to transit from the existing traditional way to the GST side. So overall it will have a little positive effect, but it's a longer run that we will see how it will be sufficient enough and how 100% acceptance will happen maybe 6 months, maybe 9 months down the line.
Okay, so there are several questions and we'll try and answer some of them in a short while from now when VS Parthasarathy of M&M and Harishanker Subramaniam of EY will join us. But Yogesh, these stocks and sectors that we are watching for, some relief to selective sectors like the small pump manufacturing companies. There is some relief to gems and jewelry companies. Do you think there is an investment opportunity in any of these sectors?
Yeah, see the new changes which have come into effect, like pumps into that. So agricultural sector will have the accessory supply or the ancillary supply from the access to the agri sector will have some more advantage over there, because it is a highly unorganized sector is also there. So maybe we can see some acceptance there, and it would be positive for maybe a few of the companies. But would it not be possible for me to comment any on the stock specific side, because we don't have much of a coverage on any of the agri sector pump manufacturing companies. Secondly, on jewelry sector, the new rule which was there for above 50,000 purchase. The customer need to provide the PAN card number and the Aadhaar card, which has been scrapped totally. So festive season is on, as per the Indian tradition is there, Diwali to December. So that may some give kicker to the sales and booster, that they will not have to disclose any of the transaction to the government officials by the jewelers, and the customers are also open for that purchase. So that will give some mindset of at least the sales boost from here. So what we are projecting on the jewelry sector, that Titan will be the advantage. Last quarter number was very super, and again with this we can see seasonally strong quarter we will see the third quarter, and PC jewelers of course. So TBZ, PC jewelers and Titan will have a good advantage over this, and third quarter result we may see some kind of a good uptick there.
Yogesh, what story are you really tracking these days and recommending to your clients?
The strategy right now for the quarter 2 results and foreseeing for the annual results, what we are looking at is really into auto segment, where still we feel that passenger vehicle and commercial vehicle Ashok Leyland can see some good kind of attraction over, even if there is any e-vehicles, electric vehicles come into picture, then Ashok Leyland is very much cop up for that. They're ready technology with them. So there we can find some good advantage over investment from here on. Again, Tata Motors at a fairly attractive valuation available, and all the negatives are into the price. Maybe a 10% downfall, maybe from here, which we have seen 360, 370 as a bottom. So a downside from this level seems to be very limited. So that will give you a good opportunity to buy there. The another sector which can be looked at is on NBFC sector and the private sector banks, where Yes Bank particularly will give a good opportunity as a reasonable valuation with a higher ROE and ROA numbers, reasonably higher ROEs. So there the branch expansion and the number of employee strength has improved to now more than 20,000 and 1,000 plus branches. So that gives a good opportunity here to again to play on the valuation game. Right, it is available at hardly a little less than 3 times FY19. So even if we compare with IndusInd Bank or not the HDFC Bank at least, but within the peers of that, it is available at attractive valuation. We can give 3.3, 3.4 times price to book for FY19, and upside is still there for this bank, and downside seems to be very limited. NIMs are very strong.
Well, we'll have to wait till Thursday to see what kind of numbers come out of IndusInd Bank. This has been an outperformer, and consistently, quarter after quarter, bank has given out strong numbers. But also there is a smaller bank, South Indian Bank, which announces the results, I understand, tomorrow, and the stock is up 2% with excellent volumes. The stock has been a buzz for a while now. Well, Yogesh, one more sector that we should talk about is pharma. If you see even today, this is the strongest sector in market. Do you like anything in pharma sector?
See, we like pharma sector from here because now it's been already been 18 to 22 months that 483 has been issued, and many import ban are still there for many of the companies. But now they are doing away with all the formalities and the compliance within for the US FDA. So we have seen many companies which have come out with the EIR of late in last 2-3 months, and the probability is very high, or the expectations are good enough that this time it would be a compliance would be 100%, or at least the restoration of the import will happen in next 6 to 8 months. So from here on, it seems that fairly attractive valuation, the pharma companies which were trading at historical valuation of premium, something like PE multiple of 25 to 30 PE multiple range. Now they are available at between 13 to 18, or at the best 20. Some of the one of the case are there which are there on exclusivity on oncology. Those are trading at about 20 right now. But ballpark, all the good companies like Aurobindo Pharma, Sun Pharma, even the smaller name Granules, which have come out with the news flow on Friday about the Omnichem JV, which is there for them, is EIR has been issued. So hopefully it will also get resolved, and it is available 11 times FY19 EPS. So there are some downside is very limited, and upside can be humongous from here. Though low base effect can give a good opportunity for this pharma space to show some kind of good profitability over a period of time.
Okay, one last question, Yogesh. That's on telecom sector. There is a newspaper report suggesting Tatas are looking to exit this sector. ADAG, we know, Arcom is already in trouble. Do you think with this, the much needed consolidation is actually going to happen, and would that turn out to be a positive for the likes of Bharti and Idea?
See, the announcement which has come from Tata, or the exiting from that, and the Arcom has a non-compliance issue or maybe something else. But Bharti and Idea, Bharti is simply something which is out of this game regime, because they are into Pioneer. Capex is already in place. South Africa business is also turning into a bit of a positive expectation there that it will be a break even from this financial year onwards. So overall, main competition is from Reliance Jio, but overall we are projecting that the migration from voice to data is a game changer from here on. 80% of the subscriber will be using data over voice. So that is a game changer for these companies, wherein Airtel is equally competent enough to tackle all this war. So we don't foresee that there will be anything, consolidation will happen, but these were the very smaller player. We have seen erosion on the subscriber base number for Tata and for Arcom drastically in last 2-3 years. So there is nothing kind of advantage overall left for these companies due to consolidation. Bharti is already equally placed there with the significant market share.
Well, thanks Yogesh for joining us this morning. And with that, we slip into a short break. But up next, we talk about consumer sentiment with Hemant Mallik of ITC, and we take stock of GST as 100 days pass. VS Parthasarathy of M&M and Harishanker Subramaniam of EY will join us after the break.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're watching Indian Open on BloombergQuint. Here at BloombergQuint, we are continuing to try and assess demand conditions across various sectors, specifically consumer-driven sectors, because some concern has emerged that consumption demand may have taken a hit due to the move towards formalization of the economy. ITC's divisional CEO for Foods, Hemant Mallik, is with us to discuss all that and more. Hemant, thanks so much for joining us. Appreciate you taking the time. I guess first question is just that. What do demand conditions look like? We've had a couple of shocks of the economy in the form of demonetization, GST, and that came on top of an economy which wasn't exceptionally strong in any case. What is your assessment?
I think if your question is in terms of what is the impact post GST and therefore the demand conditions post that, I think GST was a known phenomena. All of us knew that it is going to happen, and we had some idea or a good idea that there will be some disruption, and that we did see that happening, and there were destocking that took place. But if I were to look at the last couple of weeks or last month, I think the demand signals are good, and things are coming back to normal.
On the supply side, Hemant,
I can see that both happening, both in.
All right, on the supply side, Hemant, sorry to have interrupted you there, but just understanding how much of your supply chain may have been disrupted?
As I mentioned, you see, the way I look at it is that, okay, demonetization was something that happened suddenly, so it became difficult for everybody to respond to. But as far as GST is concerned, it was a well-informed situation. and we knew that we deal with a large number of small retailers and wholesalers. And there was a lot of effort taken in terms of educating them about this GST. We did try to make sure that, we expected some destocking, but we made sure that the trade could recover as quickly as possible. There are certain markets like in South where, we found that the impact was hardly too much. North did get impacted, but as I said that, if you can prepare yourself, you can get an advantage even if there is any kind of a disruption. So I think in terms of supply chain, I don't see any issues happening there. Having said that, at times rural wholesale took some time. But I think particularly in the food space, I think, it's quite okay now.
So would you say that, volume growth has stabilized at levels around, December quarter, March quarter? I know you said you can't talk specific numbers because we are ahead of earnings season, but give us some benchmark with which to assess volume growth and how it stands right now.
Well, December quarter is not the right one to compare with because that was the demonetization quarter. If I were to look at Nielsen numbers coming in, I'm finding that in most of the food categories, the numbers are looking in double digit. Having said that, it also has a base impact because last year around the same quarter, the numbers were not very high. So overall, and if you were to look at category-wise, biscuits is fine. Atta business is also okay, but yes, there are certain categories which have a slightly higher rural dominance where you can see the impact maybe not in the double digits.
And you said that confectioneries is one such category in the past. What is the reason for that? Is it a reflection of weak discretionary spending?
I think that could be also because the rural dominance is fairly there for a 50 paisa candy and a 1 rupee candy. And as we mentioned that there were some issues which happened in the wholesale channel particularly which feeds into these markets. And therefore that could have been the reason for that impact. But a large amount of packaged foods excluding maybe biscuits and confectionery is a lot of it is mostly in the urban markets, and there I find that the numbers are. I think in the next quarter we are quite positive will be even better.
Right, Hemant, you told Mint newspaper that you hope to become the largest packaged food company in 3 years. I presume you're on track for that, but can you give us a bit more detail on what products you're banking on to get there?
I think that discussion happened about a week back, so nothing has changed in the last 1 week. So yes, I would expect that we are on track to continue to grow. I think becoming number one is just an outcome of growth. And if you want to grow, you need to grow in your current products as well as you need to innovate and come up with new product portfolio. In fact, if I were to just look at the last 30 days, and if I were to list down the number of new launches that we have done, we have entered into, we have a, Bingo No Rules has entered the snacking space, competing in the extruded snack space. This product has just got launched in the north, and it's about a 3,000 crore market and growing pretty well. And the market is completely about making sure it's a 5 rupee pack market with toy inside, and I think we've got a very good product in, and I'm sure that will add significantly to my growth of my snacks category. We have just a couple of months back we entered with Mood Masala, which is a variant. I'm saying it's a 15 rupee pack in the instant noodles market. So it's GP Mood Masala, which is a unique, which is the first time when you can have 2 sachets and you can adjust the masala based upon your mood. And it's 15 rupees while the market is mostly between 10 and 12. So to that extent it appears premium, but we are getting a very good response, and I think that's going to be a important fulcrum for my growth in the instant noodles market. We have just launched in the biscuit space. We have launched Protein Power biscuit. It is the first of its kind. It's a sattu biscuit. It almost tastes like a besan ka laddu, but it's got much higher content of protein. So that's got into the market. So there is constant new news which comes in from our office.
All right, so lots of new launches there. Is competition getting very intense, Hemant, and I ask specifically in the context of Patanjali, which a lot of people in the FMCG market are a little bit worried about?
I think competition in the business is there in every segment. And one of the aspects of our business is that we are in the packaged food business just for about 15 years. And in 15 years, we have grown to become already the third largest packaged food business, so which is quite creditable. But it's just the beginning, as we say. So there is going to be competition, whether the competition is from multinationals in categories like potato chips, or in the future categories that will be operating in chocolates, or you will have local competitors in the form of Britannia, Parle, and of course Patanjali. So Patanjali is a new competitor, and I think every competition adds to the market. It grows the market. They spend, more people move to packaged foods, because packaged foods is not very highly penetrated. There are, if I were to look at the atta segment, just about 3 or 4% people are into branded packaged atta. So there's a huge opportunity. So when new people come in, the category grows. And I think with our market standing, with our focus on product quality, as well as we are fairly aggressive in terms of distribution, I think, more competition is good competition.
In the past, you've talked about the juices segment as somewhere where you'd like to grow share. And actually, incidentally, even Patanjali has been talking about getting aggressive in that segment. Any specific concerns for that juices segment, sir?
Juices segment, we have done well. We are now the third largest player. In fact, certain markets we have become the second largest as well. The key competition is between Dabur and Pepsi, but there are a lot of new players who will always enter the juice space. It's also how you define the juice space. There is the nectar and juices, and of course then there are the mango drinks. So there are a large number of players. One more will again, it just will be one more. As far as we are concerned, we have close to about 8-9% market share. We have launched pretty differentiated products, and that is something that we have always pride ourselves in both quality and as well as bringing differentiation to the market. We are the first one to have launched 100% Anarka juice. The second thing that we do is we are moving towards most of our juices will soon become not from concentrate. So they'll be made with Indian fruits, made in India. We are not going to be importing concentrate. And the way concentrate is made, there is a possibility that there will be a lack of taste and maybe the nutritional value. So we are moving, most of our portfolio will be moving towards not from concentrate. So that will be a big differentiator that we are bringing to the market.
All right, so just a last quick question, but you are convinced this is all fair competition, that Patanjali is sort of not playing unfair either on the advertising side or in the way they're marketing their products?
I think the fairness of operation, there are many regulators, FSSAI or ASCI, and I think they have to look at in terms of what is being fair in terms of operating the way people operate, and I don't think I can comment about that. If something is really unfair to me, then there are courts of law where we can go to address our concerns.
All right, thanks so much for that, Hemant. That's the ITC Foods division.
All right, we're going to shift our focus to 100 days of GST. Well, in the 100 days since GST was implemented, the government has changed rates for about 27 items, taking the total number of rate changes to over 100. It has deferred filing deadlines twice, raised the compensation scheme threshold twice, offered interim relief to exporters, and indicated an average monthly tax collection of about 92,000 crore. All of this suggests either an ill-prepared GST implementation or a flexible GST council and a government that's seeking to correct anomalies. Let's find out how industry and tax experts are assessing these 100 days of GST. Joining us on the show, V.S. Parthasarathy, the Group CFO at Mahindra & Mahindra, and also joining us, Harishanker Subramaniam, National Leader of Indirect Tax at EY. Gentlemen, to both of you, a very warm welcome. Mr. Parthasarathy, let me put that question very directly to you. In the 100 days, has it been your experience, and a candid answer, please, that maybe we went into this ill-prepared. Maybe we could have gone in better prepared. We would not have required so many changes. I mean, to change the rates on almost 100 items in just about a span of 3-4 months just seems a little, disruptive to industry. So many other changes have come through. Did we go in ill-prepared?
First of all, good morning and very happy to be here. Okay, that's just not to be non-candid, but in any very big deal like this, you can always say, धीरे धीरे से मेरी ज़िंदगी में आना और धीरे धीरे से दिल को चुराना. So, but unfortunately, you can't leap over a chasm in 2 steps, unfortunately. And that's what they have chosen to kind of jump in 1 step. And that's a big change. Okay, let me tell you what went right in the initial phase as we went through, and I'm talking as a manufacturer, okay? So because there is a key distinction between different industries.
Sure.
So when we went as a manufacturer, on the 1st of the month, I was able to build without any stoppage. So I just kind of switched over from the old regime to the new regime. My factory first, tractor or vehicle went out exactly dot on time as it would have done if there had been no change.
Okay.
So it enabled me to do that, okay? The second thing is my trucker called. I've reached at my destination. It normally takes 5 days, but 1 day later I'm already reached there. What do you want me to do?
No octroi.
No octroi, no post, no need to kind of stop for days together to do. And this is great as a possibility. You still have to get it right, but as a possibility, assume that we can have 75% productivity improvement in transportation. And what can it do for the country? So these are great things, anecdotal and clear. So it also did one thing for us. We said we don't matter alone. We matter in a team. Okay, and as if a national team had to play, this was a good example of national team coming together. I can't succeed unless I get my 2 layers down to come along with me, and I can't succeed unless I get my layers above me to succeed, because I can't get my GST fully cleared unless I do this. So we did this Jugalbandi for couple of months, maybe quarters before it came on to do that. So these were all great things which came about, and just see, we're not crashed. We're still doing business. We did as a manufacturing industry in auto and tractor, after a long time, September was a bumper quarter. Yeah,
that's true.
Yeah.
But sir, if I may just dispute this here. Look, nobody's arguing that we needed GST. Conceptually, it was a great tax system to move to. We're just assessing 100 days and what the experience has been, right?
So you kind of you kind of said, but a CFO is always to say, but. I've come to that but.
Okay, all right, the but.
But. So there are some issues that we've seen, and very much so. Whereas the IT system now, when we want to do everything and want to post it on the system and then assess what is happening, we are still struggling to that. GSTN is still, I think they've given us relief, but this is something that we are not completed one cycle. If I had completed one cycle, I can sit before you and say more confidently, yep, even that's done. This is a big iffy. And the second very big one is the MSME. The smaller organization in the entire setup. This we are finding them very, very finding it very, very troublesome that they are not able to gear up. In fact, I did a plan B, which was a software to go to GSTN. I've offered it free to everyone who wants to take it in my ecosystem or any ecosystem. In fact, it's available free. Okay, but for them to even transition to things like that. And this software is not full ERP. It just takes your ERP and puts into a GST applicable format. And we thought, smaller people will welcome that or need that, but there is many available in the market. The key thing is they have not been able to go to the digital world, and that's creating a lot of problem. The third is, in a larger sense, the GST rates may have been thought that eventually we'll get a level playing field versus the global world by getting taxes to be more moderate. That by equating everything what earlier and now, we kind of not had that leeway to come in. And the fourth one is that the recent changes that has happened actually causes more problem. For example, let's say a small person has to do the quarterly submission.
Yes.
I have to do monthly submission. How does the monthly submission and quarterly submission reconcile?
It was
so
going
this
to
is
be my exact point here that, I think, for instance, I know you said that there were many good things, but you also suffered a lot of destocking, in the months before GST because there was no clarity on transitional credit, right? And the fact that it was 40%, then moved to 60%, suppliers were all concerned. I know so many FMCG dealers told us that we have compelled the companies supplying to us to take over the cost of all the, sort of the warehousing product line with us.
Yeah.
So I think that was one big area of confusion. The second is, as you've pointed out, in all the changes that we are making to facilitate this for the MSME, we're also slowly distorting the structure. So if some small companies that may be part of your supply chain are filing quarterly, how are you going to work on a monthly system? What happens to the fact that reverse charge has been taken away? I mean, that was put in to be able to encourage a lot more people to join the system, and that's been taken away. So are we continuously distorting the original version of GST that we had?
Yeah. So I would put it like this in a different analogy. These are all matters that today bother me in terms of these checks and balance, monthly and quarterly. So over a period of time, this is just conjecture, that maybe the monthly one I'll put it and I can do a reconciliation up to 90%. Quarterly is the main reconciliation which comes, kind of rounds off. So and these things would happen because we need to understand, as in a family, if there is an elderly and there is a young person and there is a toddler, we would give ways for all of them to do and still work as a family unit. And this is transformational. And transformation cannot come without pain, neither for me nor for this one. It is, what I observe is that the smaller companies are struggling more. And I can't take away just by saying our exporters, just by saying, we all have to suffer a little bit. For them, the struggle is much more. If the cash stops for an exporter, he can't export next month. So this is a little bit. But I'm just saying, your point is correct. But these all are kind of fixes which is happening to representation which is coming in. So either one way it could be that I don't want to hear any representation. I don't want to make any changes based on what input is coming. The other option is tinker it to such to an extent that the ecosystem becomes manageable, and then kind of build up on it. So once the ID system comes in, major part of the pain should go away once the reconciliations start to happen. And the second one is there are many people who are appealing because there are things which are not clear. It doesn't have any precedence. Remember the Companies Act when it came, there was no precedence. We struggled. We were struggling. This is at a
whole different level. I want to get Hari in on this. Hari, can I make the same point to you but in slightly different words? For instance, I think all the tinkering we've done to offer relief, whether it is doing away with reverse charge or when it comes to exporters, promising them faster refunds or, saying that merchant exporters will pay only 0.1% of GST or it has to do with, raising the composition scheme threshold, which isn't that much of a pain, but the quarterly returns that certain SMEs with a turnover of below 1.5 crore will have to file. In fixing all these small problems, are we not creating distortions? Does it not speak of poor preparation going into GST?
Menaka, I mean, in fact, when you do a reform of this magnitude in a country of our complexity, some of these teethy problems were expected, because I don't think we really got off to an ideal GST because that was the only pragmatic way GST could have come. We could have lesser rate slabs, we could have had lower rates, but those were all wishful thinking in a country which is as complex and as
interrupting you, but this
I would say
pragmatism,
active, so
but
this
this pragmatism has been diluting GST right from day one, right? Right from the day we picked a dual structure, then the day we picked so many rate slabs. Now we don't even know whether how many of these rate slabs will persist. Already 100 items have seen correction. I know 100 in the scheme of all the items, may seem like a small amount. We don't really know whether revenue neutrality is being achieved or not at the end of all of this. The collections in the first 3 months are giving us no sense of government revenue because we don't know whether 92,000 crore will be the final number. I'm just saying, I'm not saying that this was going to be an easy, smooth transition. I understand the sort of the epic nature of this transition. But I keep wondering whether in fixing all the small problems, we're just diluting this further.
No, so let me first come to the entire rates. I don't think they can do anything about rates. They've actually done 100 tweaks, 100 item tweaks, and I would say many of them are mass consumption. As far as industry is concerned, there have been very few tweaks. In fact, it's only gone up for automotive and others. So 92,000 crores on an average collection in a standalone number might look good, but I think the jury is not out, because the transition credits, whether under the Tran 1, which was transition of cutover from the legacy system to this, and the Tran 2, which is the presumptive credits, the numbers are not out. Even the export refunds are going to start happening only in this month. So I don't think they have any sense of what those numbers are going to be. What is the level of compensation states will require? So in my view, that will not happen till the end of the fiscal. You won't get a sense till the end of fiscal. So till the end of fiscal, they really won't do any major tweaks on rates. But having said that, I do expect some tweak in rates in the next 1 or 2 years. We will converge possibly to a 2-rate structure, which could be the best you could see in the next 1 to 3 year horizon. Now, as far as what are the pain points in the first 100 days, if you really looked at the pain point on the ground, like Mr. Parthasarathy said, one was compliance. Compliance was a pain point, and let me tell you, compliance was a pain point across the industry. MSMEs struggled to get onto it, but even larger companies didn't find it easy. Because when you said transaction level, I don't think many realized what was the magnitude of what kind of ERP data you will require for those transaction level reporting. Plus GSTN, with a huge complex GST law that we have, the software to work, the algorithms to work, stability of an IT system, it's struggling. The GSTR 1 jury is not out, which ends tomorrow.
You telling
and
me
then
this?
you have GSTR 2 starting from 11th.
Simpler?
I don't know what's going to happen.
Could this not have been
GSTR 2.
simpler? Like, for instance, banks have to report every transaction, I'm told. So I'm saying, could this not have been simpler? Instead of having consumed so much time in filing returns, and I'll actually also put this question to Partha, because he is facing this pain, if it is pain at all, on a more regular basis than anybody else. Could this not have been a simpler filing system? Not just for small companies, Mr. Parthasarathy, but also for large companies like yours?
So to simply put, if you have to bring, a country like US decided not to have it because state and center are two different kind of things, and we have state, center, and municipality and various. So there were many parts of it. So I'm kind of putting myself as two people, as CFO of a company and a citizen of the country. So what had been achieved to bring them together, just to agree to something, has been monumental in its own right. And having said that, now you are wanting to be very straight. So you're saying, hey, why are you giving me all this gas? Talk about brass tacks. I'm saying my billing, my business didn't get impacted. That's a great positive.
Are you saying that you're okay with the amount of filing you have to do?
Yeah, so I don't think in the manufacturing sector the filings are larger than what it used to.
Okay.
And when it settles down, I am confident, because the IT side of me tells in when everything is going to be digital, it's going to be far less things that needs to be done than earlier. Then earlier I used to do in all states all these things anyway, because I used to do 3 levels.
You're still doing in all states,
yeah,
right?
So now all states could be center. I'm not even going to have manpower at the states in the eventual things. My eventual organization is going to be centralized, because they can do for all states sitting at one place. That's what digital can do for you.
Okay, so you're saying it has not been as onerous as you expected.
No.
Though I'm sure the story for small and medium enterprises is very different. I know many of them, the mom and pop shops, the traders, have been complaining about having to spend a large amount of money on employing chartered accountants, CAs who may not have all the answers. But, that aside, let me also bring up the issue of this undoing of the reverse charge mechanism, right? Again, I asked the question. It was meant to cast a wider net, GST. When you undo the reverse charge mechanism, do you not dilute some of that proposition?
Well, Menaka, I was not convinced with this reverse charge to start with. I mean, it's okay, you want to expand the base, but you can't expand the base overnight. In fact, reverse charge, you have no idea what kind of compliance issues it's creating for larger corporations and what happens to a very small MSMEs as far as reverse charge was concerned. So I'm not at all complaining that this should have got postponed to March, because they shouldn't have started with reverse charge to start with, because it was creating a lot of pain. You can expand tax base, but it takes time to do expansion of tax base. You can't do it overnight, And also, as far as compliance is concerned, at least up to 1.5 crores composition, they've gone into quarterly. And I want to just clarify, though those people might file quarterly returns, the larger people who buy from them will still get presumptive credit on the basis of GSTR2, and the reconciliation will happen over a quarterly period. So they have taken care of that. I won't say they have not taken care of that. The only thing I'm saying is that imagine GST Council, state and center sitting together in the spirit of federal cooperation, a body for the first time taking decisions. Okay, you may not be perfect.
And nobody's taking.
But they are responsive, and I'll tell you, even the compliance.
Like I said, I set it up.
You give it another 3-4 months, it'll come to a system.
I set it up right up front, saying you could say that they're responsive, or we could say that it's ill prepared. Okay, let me wind this up here because I do want to understand what we need now next done. So, Mr. Parthasarathy, what is still left for the GST Council to do in terms of the fixes? I'm sure that the tax in itself is going to take a long time to evolve, but in terms of the fixes that will help enable business to get back to business as normal, whether it's large business or small.
Number one is fix the IT, GSTN and other complications which are running. Get that very quickly.
Yeah.
Second, don't change rates for some times. Let it stabilize. Whether it's now gone up, it's okay. But keep rates steady for some time because it's so difficult if we change. Then things happen. Third is responsiveness. What we have shown is good on a five-fight basis, but in the next 6 months will be when things will be tested on when returns are being presented. They are not equal to what they are saying. So we're going to see some bit more churn, and both forbearance as well as response is required in this. These are my 3 big asks, and the smaller firms which I have seen which come to me for help, they are saying, hey, now I don't get input credit. If it is interstate, it's not allowed. But I buy most of my goods from south and sell it here, and my total turnover is still 1 crore. What am I going to do? I'm nowhere. So these are the kind of still further fine-tuning which we'll have to do. So we'll have to do something more for those people than what we have done. So to your change. So these are the 4 things I would kind of look forward to as I go. Give it a little time. And the last, get the refunds fast. It's been promised, deliver it.
Well, most important for the export community for sure. Hari, very quick 30-second answer on what needs to be fixed and when will we have a really good, clear picture on government revenue, on tax revenue from GST?
First and foremost, I'd like them to fix the compliance because large companies are still struggling. So compliance, GST and stability is for me foremost. But in all this compliance pains, people have forgotten the interpretive issues under the law. So they also need to quickly bring and constitute and make the central advance authority functioning. Otherwise, you will have not lack of consistency as far as opinions are concerned. And you will go back to the same litigious atmosphere we had in the legacy system. So that's the second thing I would say I'd like them to do. And third, I completely agree with Mr. Parthasarathy. Don't tinker the rates for some time. And I don't know whether you saw today morning's paper, the concept paper that they have created is actually saying that, let's wait for some time before we tinker rates. Because when you tinker rates, all the businesses have to change their plans, and then you have the entire anti-profiteering bogey. So I don't know why would you tinker rates when people are still stabilizing in GST. The fourth to me, which is very critical, which I don't think I have seen any information on, which I mentioned even on the 6th interview, is that they have not done anything on this so-called excise incentives. Area-based excise incentives, there is still no clarity. There was only a DIPP document which gave a overarching view as to how that refund mechanism on a percentage basis only as far as CGST will work. Neither the states nor the center has come out with any clear notifications as to how that's going to work, because that's very, very critical across the sectors. Whether you look at FMCG, life sciences, automotive, the whole sector, retail, that's another area which I feel they need to address fast.
All right, Hari, Partha, thank you very much. We're going to leave it there. I was hoping that one of the questions I could ask is whether the benefits of GST have started accruing, but maybe that's a little too early to put in terms of a question, all the doing away with cascading of taxes, etc., etc. But I think that might still take another 3 to 6 months for companies to be able to give me an honest answer on that.
Yeah, as of now, we can say, thoda hai, thode ki zarurat hai. Zindagi yahan fir bhi khoobsurat hai.
I've learned always to end a conversation with Mr. Parthasarathy on that, on verse. So on that poetic note, thank you very much for watching. It's a wrap on today's Indian Open. Up next is the FNO Show.